The stock market's up, GDP is up, but consumer sentiment is down, and consumer happiness is in fact down. What exactly does this mean to the stock market and to where things are going? We're going to talk about that right now.
Welcome to the Trending Report, brought to you by USA Financial. The Trending Report is a bi-weekly show that aims to focus on the trend lines rather than the headlines. Each episode features commentary around the state of the market, as well as other factors that may impact your personal finances. The host of the Trending Report is an investment advisor representative of and securities are offered through USA Financial Securities, member FINRA SIPC, a registered investment advisor. The Trending Report is educational and not intended as personal financial advice.
Last time we were together, we spoke about China and the unusually rapid decline that they have experienced. That's brought up a few questions about the United States, and it is interesting that the market is up, GDP is up, but Americans in general are kind of down. So we're going to talk about that and its correlation, or maybe a better way to say that is its disconnect. And as always, we're going to be going through some traditional market data, the way we always track things for you, and that's going to be based on data ending last Friday, which was February 23rd. So with that said, let's jump right in. So here we are. We're going to start with a 5-year view of the S&P 500, and the fact that over this period of time, if we literally just draw a line like so, the market is up a little over 80% over that period of time. If we take a look at, I believe this is 10 years, a 10-year view of the GDP for the United States, it is continuing to grow with one small exception here. Which was during the pandemic. We took a slight step back, but then brought that back in line. And even for 2023, which is getting still wrapped up, it is anticipating to come in significantly higher than 2022. So generally speaking, when the market's up, when the economy, aka the GDP, is up, generally speaking, people are up. They think that their prospects for the future look well. They have good high consumer sentiment, as they call it, and things of that sort. But we're not really seeing that right now. So let's take a look at what's happening. So this is a study from Gallup, and they go back and identify the percentage of people who would describe their life as thriving. And as you'll notice, we've got the drop here taking place with the basically correlating to the pandemic and all that went along with COVID and so on and so forth. But generally speaking, the incline is up, and even the bounce back after COVID is kind of right in line with the growth that had taken place. However, since then, look at this decline that's taking place. We've got a significant decline since the rebound, since the rebound following COVID. Now, if we look over here at theglobaleconomy.com and their happiness index for the United States, and this goes back a little further, this is going back to 2013, generally speaking, you can see there's quite a decline in the overall happiness as they rank different countries. And this is on a scale of 1 to 10. So we're coming in now at a 6.69 out of 10, whereas back here we were over 7 out of 10. So it's not a monster size drop, but it is a very steady drop, as you can see. And then the University of Michigan, famous for its consumer sentiment, as you can see, going back to back in 2019. So this is a 5-year chart. We've got a steady decline in consumer sentiment that's been taking place. Even though a moment ago, we just looked at the fact that the market's been up, GDP's been up, but these, excuse me for that flash there, these are dropping. And if we look at the rising trend in depression rates, and again, this is once more from Gallup down here, this green line right here is identifying those that have lifetime depression, and this blue line is those that have current depression. And the real instance is the fact that they are both increasing. So again, one would think that would go away. So Obviously, what's happening here is not directly related to the market. If it was, depression rates would be going down, and those other more positive sentiments would be going up that we spoke to. So something more is going on. And this is the part that, again, I'm interjecting a bit here, but all you have to do is Google around and you'll get headlines similar to what I've got here. There are problems with smartphones and technology and the blue light and people not sleeping well because they're on their phones either just before bed or when they should in fact be sleeping. Social media, you've heard all of the things about social media. Basically, social media convinces a lot of people that everyone else has a better life than they do. And 24/7 news cycle convinces a lot of people that the world is falling apart. So when 24/7 news cycle came out with CNN originally, everybody thought that was an insane idea. Nobody's going to watch news for 24 hours. How could you even fill it? Well, not only did people get addicted to it, but they had to come up with ways to fill it. So now there's a lot of opinion in there. It's not just facts and news any longer. And they realized that the more ominous the headline, the more people would pay attention. And then as we fast forward into an internet age, the more people would click on that particular article. And the same could be said for social media, I would imagine, as well. And then with the pandemic, we had a huge transition into remote work. And in many ways, remote work can be very positive, but it can also be very lonely. So there's all kinds of studies coming out now, but most of them are kind of landing on the idea that hybrid remote is the way to go, because too much remote cannot be real good for people. But some remote can actually be helpful for the right person. It really depends on the person, whether or not they prefer to be in the office every day, if we're talking white collar jobs, or whether they prefer to work periodically from home. But even if they prefer to work 100% from home, they have to be careful. Because even though that might be what you think you prefer, you could actually be doing some damage to yourself. So I think you need to, be careful that you don't become, as this particular article from Harvard Business Review says, lonely in that space. And then there's a whole nother discussion about young people coming out of college and going purely remote and kind of getting overlooked in the promotion chain from jobs because they're simply kind of out of sight, out of mind, and things of that sort. So things to consider there. And then right now, as we're coming into election year, you've got the political news, and they're basically talking about how it truly can be bad for your well-being. People don't trust the politicians. People don't trust the news around the politics. And now with AI, there's a lot of discussion about what will we in fact be able to trust in terms of what we're receiving in social media or in online news and so on. So all of these things, I believe, are really more correlated to these charts than are these charts. Historically speaking, these were what they were correlated to, but they don't seem to necessarily be so any longer. So interesting difference in kind of how the economy and the market operates versus how people feel about things going on in the economy and the market and the world in general, for that matter. Now, with that being said, let's jump to our traditional viewpoints. So here we are back to a one-year view. We're looking at the total stock market. We are ranking based on trend. So as you can see, when we're talking about capitalization, it is the large caps up here that are winning the day. They're lifting the trend, so to speak. And it's the mid cap and the small caps down here that are pulling it back down. However, that being said, we are seeing green up here on the swing, and we are seeing green over here on the trend. Everything you'll notice up above right here is coming in positive green, means it's all tilting bullish right now. Now, if we go to sectors and we take the equal weighting of all the sectors here in the middle, again, very similar to the overall market, but slightly different. We're again seeing green up here in the trends. In the swing. We're seeing green down here in the trends. We're seeing just about all green, but we are seeing some red trend down here on utilities and silver. But healthcare, information tech, industrials, financials, all up here at the top. Real estate, materials, consumer discretionaries, and consumer staples being further down the line. And if we look at international equity and we take the total international stock market, not doing as well as the U.S., but it is right now in some green swing up here, and it is in some green trend down here. China, which we discussed last time, is the only one in red. So overall, the markets across the world are doing quite well these days. And then lastly, we'll take a look at the bonds. The total bond market here in the center is getting red on a swing. We're seeing that coming down right here with those red dots. It is still positive or bullish on the trend. But up at the top, we've got municipals and corporates in short term kind of leading the charge. And we've got, for the most part, if we don't pay attention to the international bond, we've got, for the most part, governmental bonds, which are down here at the bottom right now in terms of the trend. And that is coming off of this big dip that we saw late last year, and now starting to see a bit of a dip again this year after peaking towards the end of last year and beginning of this particular year. So I hope that's very helpful for you. We will continue to monitor these things. We'll continue to track things as it relates to the market and to stocks and equities. And we'll continue to look and bring in additional data for you in terms of kind of what's going on just in the economy in general. So again, hope that's helpful for you. Thank you for all the trust you place in us, and for all the advisors who do business with USA Financial. Thank you. And we'll be back soon.
Thanks again for listening to this episode of The Trending Report, powered by USA Financial. We invite you to visit usafinancial.com to find out more about our work with independent advisors and their clients all around the country. Any projections, targets, or estimates in this report are forward-looking statements and are based on the firm's research, analysis, and assumptions. Due to the rapidly changing market conditions and the complexity of investment decisions, supplemental information and other sources may be required to make informed investment decisions. All expressions of opinions are subject to change without notice. Clients should seek financial advice regarding the appropriateness of investing in any security or investment strategy discussed.